Okay, let me also welcome in Amit Jatia of Westlife, who's joining us now. Amit, let's talk about the recovery, the extent of it. In the December quarter now, how far do you feel you're at from those pre-COVID levels? How are things looking?
Was very good. I think month on month, we saw extremely good growth in our business. What was most heartening was that exit December, we were pretty much at 97% of pre-COVID. And we kind of look at pre-COVID as the February sales that we had just before we entered COVID. And even in-store has been growing regularly month on month. And we exited December with almost 83%. So having seen 97%, we were quite delighted, and especially with the growth we had sequentially of 55% quarter on quarter. So all in all, I feel the recovery has been pretty good, and we are quite excited.
Okay. On gross margins, what's driving the performance there despite lower sales? Is there a change in the revenue mix?
No, actually, more than revenue mix, obviously, we have used this opportunity to ensure that we completely reoriented our cost structure. And that involved looking at every line item in minute detail, starting obviously from the corporate office, looking at rentals, looking at, optimization of people in the office, although we continue to retain most of our people. We particularly focused very hard on supply chain. We worked with suppliers looking at their costs and trying to see what we can eliminate there. And having put all that together, essentially, if you look at December data, because that is real, at a 25% lower sales in December, we were able to generate a margin of 13.1%. That is operating EBITDA margin, which is pretty much similar to last year, December. So which kind of confirmed our thinking that on a 20-25% lower sale base, we were able to maintain our margin. So it was largely around cost structure. And of course, the fact that as in-store was coming back, we were able to retain all our convenience channels. So the two put together helped us, get our margins quite nicely back.
Morning. Now, despite the lower sales and scales, you're back to pre-COVID levels when it comes to your gross margins. So what exactly is driving your performance there? Is there any change in your revenue mix that you foresee?
No, like I said, revenue mix has not changed much. In fact, in a way, McCafe is still at about 80-85% recovery from pre-COVID. And yet we've been able to get to gross margins similar to year on year. I think, as I mentioned earlier, it's all about supply chain management. So we looked at every single line item of cost, worked with suppliers, and we were able to get efficiency in distribution, in suppliers' cost structure, and that translated into better gross margins for the quarter.
Okay. Now, the rise in food inflation, Amit, has been a matter of concern for most. Is there some sort of a risk? Are you foreseeing this impacting earnings going forward, and what's the outlook?
Sure. I mean, see, inflation to some extent has been strong in India over the last 5 to 7 years. And I feel my view is that if you do business in India, you have to factor inflation into your thinking. So I am concerned about inflation rising a little bit in the future as demand picks up, if supply channels are not fully in place. However, as always, I think we've already factored that into our thinking. And essentially, we are continuing to drive cost initiatives. And we expect with sales kind of coming back along with the cost initiatives, we should be able to manage inflation. So inflation is a real risk in the future. But at least from a Westlife point of view, I think we've kind of recognized that and built that into our planning.
Okay. Just as we saw the QSR space recovering from COVID, we saw the bird flu hitting the sector. Chicken consumption, of course, in a lot of states has seen a huge plunge, 40 to 60%. Any impact on your operations as well?
Well, what I can tell you is from a total sales point of view, we are not seeing much of an impact. I'm sure there must be product mix shifts. As you know, McDonald's has a very strong product called Filet-O-Fish. And what we've seen is during previous times of the avian flu and bird flu, people would switch from one product to the other. Obviously, chicken sales go down, but luckily for us, fish and then vegetarian products go up. So overall sales have not been impacted, but definitely chicken sales are down, no doubt.
Amit, you're not getting into the biryani segment anytime soon, are you?
No, I mean, from our point of view, while rice is pretty standard for McDonald's in Southeast Asia, I mean, we do rice in a certain format already. And, we kind of relaunched it in South India a little bit earlier this year. And that's kind of coming along quite well. So, yes, you will see rice offerings, and we will talk a little bit more about it. Not that we don't have it yet, but whether it's biryani or what it is, I don't know as yet. Let's see how it all unfolds.
It's almost like paints and sanitizers. Now, biryani is what just about every company is getting into. Okay, but that aside, also wanted to understand, reports are suggesting, Amit, that around 25 to 30% of the restaurants have shut down and the unorganized players are clearly not in action. Have you gained anyhow because of this? I mean, have you seen a market shift or a market share actually uptick coming in because people are now going for more branded products, and that's the same across the QSR and the hospitality segment as well?
No, so you've absolutely got it right. I think the shutdown numbers are estimates. It's hard to sort of know that. But from our own research, we know that the total informal eating out market is down by about 25 to 30%. And unfortunately, the biggest impact is to the unorganized players. People at this time are looking for food safety, hygiene, and probably procedures that give them comfort that they are safe to eat at these restaurants. And since organized restaurants like McDonald's, for example, we introduced a 42-step checklist to ensure that food is safe. And that communication gives consumers confidence. So yes, the Western fast food sector has not seen the same 25-30% drop, which clearly means that Western fast food has gained share in the entire eating out market. And since we have not lost share and we are in the ballpark, we kind of gained share in the total informal eating out as well. Yet, of course, sales are lower. So you can see that, the recovery is not full. But within the industry, yes, organized sectors are winning at this point in time.
Okay. So what happens to store additions then, Amit? Are they on target or are you looking at lesser launches for now?
I have always believed that the opportunity in India is huge. And essentially, we should have 500,000 restaurants over a period of time. It's just that our focus is on sustainable growth. And therefore, you will notice that even through, say, the last downturn, which was in 2013, 14, 15, very, very difficult time for the industry, we actually added 100 restaurants. So, while we don't do 70 and then 30 and then 20, I think consistency gives us sustainability. And therefore, yes, you will see us add 25 to 30 restaurants. We'll get back on track from FY22. This quarter, we've already opened 3. And I'm really excited to tell you that in January, we opened at the Mumbai airport at international departures. So you can see that that we will continue to be aggressive and get back on our growth platform pretty soon.
Time's running out, Amit. So just very quickly, would the focus be more on dine-ins or takeaways?
See, I'm a strong believer that dine-in is not gone forever. And your design has to be an omni-channel design. So that means we should be able to serve customer wherever, whenever, and when they think of it. So I think that we've been able to build that quite well into our business. So you will continue to see McDonald's the way it is, about 2,700 to 3,000 square foot per restaurant with a strong takeaway and, of course, a strong in-store as well. So I don't see much of a change because I do see business growing over the next 5 years, an average unit volume going from about 5.5 crores to about 6 to 7 crores. So that's how you will see McDonald's in the future.
Okay, Amit, great to have you on the show as always. Good chatting with you. Flat for the index, even though it looked like it's going to be one of those smart starts. The breath as well has completely come off. It's Reliance single-handedly, which is the biggest drag, down about almost 4%. We'll take a very quick break. When we come back, we'll chat with HDFC Life's Vibha Paralkar.